Let's start with the gold prices, which have come off their 4-month highs hit on Monday after Russian president ordered his troops to return to base after a military exercise being conducted near the Ukraine border. This has helped ease sentiment among investors who were feeling a full-fledged armed confrontation as a possibility. The gold prices on your screens have seen a decline coming in, so $17 down on there. The crude prices also have seen a decline. The developments in the Ukrainian crisis saw the prices easing off. Take a look at the crude prices, where you have seen the Brent trading 1.5% on the lower side. We have come back nearly $3 from the kind of highs that we saw. Same is the case for the NYMEX as well, where you have seen 1.5% of a decline at the last count. Let's get on board then. Kishore Narne, he's Associate Director, Head Commodity and Currency, Motilal Oswal. Also joining us is Vijay Bhamwani, who's author and CEO at bsplindia.com. Kishore, hi to you first. And what's your sense really on the kind of movement that we have seen in the last 24 hours, especially in gold and silver?
Manisha, I think we have seen the continuation of the move which started early in February and which has been associated with weakening macroeconomic numbers and the last end came up with the Ukraine issue popping up. But I think again, looking at this situation, probably the rally has come to a stage where it appears to be tired, and it will be really difficult for gold to cross the $1365 or $1375 levels, which are very critical resistances. So I hope that the Ukraine issue will be solved diplomatically, or at least the intensity will be reduced in the next few days. So gold should be, once that kind of signals come up, then gold should be correcting back to around 1320, 1315 kind of levels, and domestic markets probably 29,500, 29,300 could be on the cards.
Vijay, what is your sense, the kind of flip, if you can call that, in sense of gold and silver prices in the last 24 hours? We have seen huge range building up between 1335 to almost 1355 on the higher side.
Manisha, the entire rally has been triggered by a news event, that is Ukraine, and now that you're seeing a respite from there, you're seeing a commensurate cooling off of gold prices. Now 30,600 is a level that we talked about in the last one or two trading sessions. Gold has been unable to close convincingly past that level, so one can assume that a short-term top has been formed, and should there be no resumption of rhetoric or saber rattling or threat of armed conflict, I think the speculative premium might contract and prices might just go down to 29,800 to maybe even 29,650 levels.
Kishore, it hasn't just been the precious metals. You have seen the energy also decline there. But would you say, I mean, as you pointed out for precious metal as well, the weaker economic data from China and US, that also has been putting pressure. But how are you looking at the US weekly numbers?
I think, Manisha, here in energy, whatever the rally we have seen is predominantly weather-driven rally and also slight fundamentally driven. Again, Ukraine definitely added to the premiums, but again, I think even if something goes into a war or a sustained conflict, typically is seen as a negative for crude oil prices, not the natural gas, because again, natural gas being the geographically proximity to the Russia, and there could be some issues in natural gas, but otherwise crude should be, normally in a war period, crude should be coming down as the travel and other activities will be curtailed. So I think maybe a dollar and a half possible on the higher side, 6,550, 600 is possible, but I still believe that selling on higher levels is a good strategy in crude rather than buying at these levels.
Vijay, how would you look at the energy space? The world has been a very volatile space in last, or rather this week itself, for natural gas prices, especially after we've seen that 23-24% of a cut coming in last 7 sessions. How would you look at the ranges?
Manisha, I think 300 as a psychological and a technical resistance is a pressure point for natural gas, with support coming in at slightly below 270. So you have a trading band where 268 to 270 is a level where momentum-based players might just attempt to bottom fish a little, with 10 to 15 rupees of a speculative profit potential coming in. Now we need a breakout or drawdown below these thresholds. Either the natural gas falls below 265 to trigger a bigger sell pressure, or it goes past the 300 levels and the rally resumes again. But till that happens, you're trading within a band between 268 to 290.
Kishore, how would you look at the base metal space? Because while yesterday they were lagging behind, today they have seen an opportunity buying coming in. Copper prices are off their 2-month lows, and same is the case for nickel.
I think, Manisha, the overall bearish sentiments prevailed over the last week or so, especially driven by the weaker macroeconomic numbers. But certainly cooling off, or you can say in the geopolitical pressures which have been there, has been a positive for global equity markets also. I think that spillover effect will be there in base metals as well. Though copper still appears to be bearish even at current levels, and maybe I'm looking at somewhere close to 438, 435 levels possible in the next couple of sessions. But probably nickel and zinc are looking much more stronger, and probably there can be a buy attempt from these both metals. I think nickel could be possibly going to 925, 928 levels. So with a stop loss of 898, one can buy nickel as well in the current levels.
All right, so a buying call coming in for the base metal sector for the intraday market there. But remember, there have been concerns with the Indian domestic gold markets here. The India Bullion and Jewelry Association has announced March 10th as the Bandh for all over India for bullion and jewelry industry. The industry is asking for reduction in customs duty, reversing of the 80-20 rule, and also speedy clearance of gold imports and exemption of ECGC by banks for gold imports, among other quite demands that they have put across.
Our industry has been treated like some sotelapan from the government of India, on which we have protesting on protesting on 10th of March against outgoing government. We have made a bandh for all over India. All retailers, wholesalers, jewelers, manufacturers has done a peaceful bandh on 10th of March to give a message that we all are together. And we have also given our manifesto to Shri Rajnath Singh ji. He has told us that whenever and when the NDA will be coming in power, within 30 to 60 days, all the demands will be fulfilled, and the gems and jewelry industry will get its glory back.
It has been a busy day for the agro commodities as well, where you have seen some gains coming in for mentha, the chana prices, and sugar has been under a bit of a pressure there. The closing slightly on the positive side there. Kishore, how would you look at the pulses space? The chana price is essentially holding above that 3200 mark.
I think chana, as I've been discussing, that probably we've seen already bottomed out, and probably there is a sustainable rally towards 3380, 3400 kind of levels. So even at current levels, I would go for a buy with 3085 as stop losses, and probably 3210 as a potential target for next couple of days.
Vijay, how would you look at the mentha prices? A good 3% of an up move today.
Manisha, I do admit to have been taken by surprise by the rally in mentha. I was expecting a decline, but now that mentha has basically rallied by 3% odd, I think 845 to maybe 855 is a potential upside target in case the rally does persist. However, I would still feel uncomfortable buying. I would still seek short selling opportunities at higher levels rather than buy the dips.
Edible oil space is another one which has been looking at good gains in the recent past. How would you look at that, Kishore?
I think there should be some cooling off coming up in both soybean and mustard. So I would suggest to sell March contract soybean at around 4,220, 25 kind of levels, with stop loss of 4,265 and a correction towards around 4,160, 150 kind of levels.
All right, Kishore, we'll let you go at that. Thank you so much for giving us your strategies. Well, the food prices in the recent days have been volatile due to Brazil drought concerns, the Russian-Ukraine issue, and also the initial Indian monsoon forecasts have not been so great. And then you have the Indian food inflation still near those double digits, and of course, this is the election year as well. Let's get in a couple of people then to talk about the subsidies and of course the food prices. Joining us for that is Santosh Nair. He is CEO, Camson Biotechnologies. Also joining us is Ashok Gulati. He is from Commission Commission for Agriculture Cost and Prices to talk about the space there. Santosh, to you first, and what are the issues that you think that the government needs to address with regards to the agro space right now?
There are two issues which the government needs to understand or should have checked before they really get into it. One is the implementation part of it, because today, I mean, the whole implementation seems to be a big question mark. There's a large amount of money which seems to have been pumped into this, but the whole linkages down to the last person who's really going to be benefited out of this, I don't think that is really taken care. Even today, you have rural areas which are not really connected. The whole PDA system, the distribution system doesn't seem to be there in place. The whole, where the stocks are being secured, that is also not. The FCIs of the world don't seem to have enough and more, space in terms of ensuring that the safekeep of all these products.
Mr. Gulati, what's your sense? Because we have seen a lot of choppiness into the prices, spot as well as the future markets there. How do you see the way forward?
Unfortunately, future markets in this country, particularly for the key crops, has not taken off in any big way. There is a lack of trust, I would say, in the operation of futures. When the prices go up and suddenly we feel all the players in the game are cheating or trying to rig the market, and we put a ban or suspend the futures, then it cannot act as a price discovery mechanism. In theory, that is what it is. But how to create conditions where people, the big players particularly, are not able to rig the market? That's a very fine balance, but it needs close monitoring of the situation and a regulatory framework that can haul up the defaulters at one or 2 points.
Dr. Gulati, there's lots, as you pointed out, there is a slight distrust when it comes to the futures market still there, but the implementation process for the agri-marketing, how are you looking at that? And of course, this is a difficult year if you look at the agri-commodities.
There are two parts of the implementation. One is whether we have enough buffer stock. I think we have more than enough buffer stock for the next 2 years. In fact, if you look at the buffer stock norms, you are keeping way, way above that. So if I was to choose, I will liquidate straight away 15 to 20 million tons of grains in the open market. But so the problem, even if El Nino comes, I don't think there is that big a danger given our buffer stocks. The problem and the real challenge is in terms of reaching those who are the targeted beneficiaries. Half the states don't have the beneficiaries lists ready.
Santosh, this one is to you. While, as Dr. Gulati said, the food grain buffer stock as of now is quite huge, but going forward, what do you see the production going as I have been pointing out, there are various concerns there, and we have been pointing about contract farming technologies, all of those still, quite backward really when we talk about them. We will come back to Santosh, but the same question to you as well, Vijay. How are you looking at this year? Because as we have been discussing so many issues this year and the agro prices are expected to be on the higher side, which one would you choose really in sense of price gains?
Manisha, I'm bullish on chana because once you see end of April and the beginning of May where the weather warms up, the festive season, the marriage season starts, I would expect chana prices to cross 3350, if not 3400. So I would bet on chana prices going up, number one. Number two, I think sugar prices are likely to escalate upwards because what you are seeing is the FRP/SAP imbroglio kind of subduing sugar prices, which are likely to spring back with a vengeance once this pressure on prices is taken off. The other area where I think prices are likely to appreciate further would be in terms of spices, especially I think black pepper is an area which I would watch out for. A wildcat entry would be cardamom, which I think could see a bullish year up ahead.
Dr. Gulati, this one is to you. What are your views on the agricultural marketing? Because that has been a major area of concern when it comes to the agriculture, the integration between the spot and the MSP and the futures as well. How do you see the road forward?
Well, marketing, we have to integrate the country across space, that is all the states. That means we need to have free movement, but we also need to allow the private trade to freely trade the commodities and have some stocks. We have a lot of restrictions on them. That is one part of the story. There are stocking limits. Many a times there are levies in the system, as on rice millers. These have to go. These are the remnants of 1960s and early 70s. I think we have to get over those. But then the second thing is, we have to go and integrate the economy intertemporally on pricing, and that's where futures marketing comes. But I would say the warehouse receipt system, the negotiable receipts, under a proper regulatory framework with a lot of storage capacity and making the warehouse owner responsible for the grading and quality of the produce and reporting every evening how much stock is there, so that the system is foolproof against any frauds. That's the system that we need to develop and scale it up, because the farmers will have a better choice to trade whenever they want, and they will get a better price for that. So warehouse receipt system with due policy and regulatory framework in place, that is the way to go.
Well, warehousing receipts definitely is something to watch out for. Santosh, a final question to you. Technology is another thing that the agro space keeps talking about. What's your sense on that?
I think technology has to play a large role today. I mean, if you talk about 1,15,000 crore which has gone into only the food subsidy part of it, my question comes back: how much of it has gone into research? Now, research seems to be the way forward. I mean, countries across the globe have been spending more and more on research, and hence they seems to be much more sustainable in terms of their the needs in the next 5 to 10 years. But here, I really don't see that kind of things happening. Number one. Number two, you got to have a level playing field between a urea or between fertilizers which are complex in nature and the organic or the natural fertilizer. Like companies like ours are absolutely into this, but today you really don't see subsidies for these kind of companies. Unless that starts to happen, you won't see these kind of things starting to move in India, and you'll keep reeling back in terms of these kind doling out large amount of subsidies, which is going to literally pinch the exchequer.
Santosh, the food grains, what is the way forward in terms of production, and how would you look at the contract farming issues as well? That's a question I was asking you earlier as well.
Manisha, my biggest fear is, if you see every year in India, we lose close to $4 billion worth of crops. It's wasted because of pests and all of that. Today, we are the least in terms of, even on a hectare basis, 156 kgs per hectare is what we use. Even Pakistan, our neighbor, is about 200 plus in terms of usage of fertilizers. Similarly, when it comes to usage of pesticides per acre, I mean, all of these things has to change. Now, after the revolution that has happened, green revolution over the 60s, I mean, things have really improved. But as we go along, the yields have started to reduce, started to go down. That's one. Second is the climatic factors. I mean, has anybody looked into it, saying that what is going to happen the next 2 years down the line? I mean, we are all worried as a corporate, as a company, to ensure that how do we ensure this kind of security. Second is 80% of your farmers in India are in a 1 hectare kind of farms. But unless you get into contract farming, unless you allow corporates to get into contract farming, all of these things are not going to change. I mean, it has to be a larger picture to be addressed, rather than looking at just a one-off thing just to please the public and the vote bank.